Hello everyone, welcome to the Dividend Enjoyer channel. Today we're going to be doing a stock analysis video on American Express, ticker symbol AXP. American Express stock currently trades for $301.05 a share. It is currently up 59.87% year to date. The market cap is $212.07 billion. The PE ratio is currently 22.15. The dividend yield is 0.93% annually. The 52-week high for the stock is $307.82, and the 52-week low is $177.81. I decided to pull this image from the Wall Street Journal showing some of the analyst ratings for American Express. You can also see on the left, this is their earnings compared to what analysts expected with the black line, and they've consistently beat. Specifically, quarter two, they really hugely beat, and analyst price targets are kind of all over the place. We have the average at $292.59, the median $295, the low $230, and the high $350. And the current price of the stock is $301.05. So here we have a slide from their investor relations page specifically about the most recent quarter's earnings results. As you can see, everything's pretty much up other than average diluted common shares outstanding, which is really good because you want the amount of shares outstanding to decrease. And here we had the chairman and chief executive officer say, "We had another strong quarter that reflects the earnings power of our business model and our continued investments for growth. Third quarter revenue reached another record of $16.6 billion, up 8%, and earnings per share of $3.49 was up 6% year over year." And we can see from here that build business is up 6%. Total revenues net of interest expense are up 8%. Net income year over year is up 2%. Diluted EPS is up 6%. Adjusted EPS is also up 6%. And like I said before, the shares outstanding are down 3%, which is really good to see. And they also include the 9 months ended, so the last 9 months year over year compared. And build business there is up 6%. Total revenues net of interest expense is up 9% in this case. Net income's up 24% from 9 months ended compared year over year. The diluted EPS is up 28%. The adjusted EPS, excluding transaction gain, is up 20% as well. So raised their earnings guidance and what they thought they were going to make. So previously, earnings per share they projected was going to be between 13.3 to 13.8, and now they have raised it from to 13.75 to 14.05. And they say we continue to expect full year revenue growth that is within the annual guidance range we provided in the beginning of the year at around 9%. In the third quarter, total card member spending increased 6% and card fee revenue growth accelerated to 18%. We continued to attract large numbers of new premium card members with 3.3 million new card acquisitions while maintaining our high retention rates, excellent credit performance, and expense discipline. So essentially, what I really like about American Express and what they don't say here, but what you can kind of infer from their business model is that the business model has extreme network effects. And this essentially means that American Express, as they add new people to the American Express network or as they get new cardholders, and they have high quality cardholders too, it's a very high quality business. But as they get more and as they're spending more, they tend to be able to offer better rewards. And when they offer better rewards, they get more people to join. And when more people join, they can offer better rewards. You guys see how I'm framing this and where this is going. Essentially, American Express becomes more valuable the more members join in. And as it becomes more valuable, it can offer more incentives to get more members in. So I really like this business model, and I think it's tied to a lot of different smaller and larger businesses. as well as being tied to a lot of different card holders that can make them a lot of revenue. So I think this is a super important part of American Express. And if I find that this stock is undervalued, I'm going to be buying in. This slide kind of demonstrates the benefits and rewards that card members can get for being in American Express and kind of how they keep people to stay within the American Express ecosystem. And it says, they design innovative credit charge and debit card products, payment and lending solutions that appeal to their target customer base and meet their spending and borrowing needs, using incentives to drive spending on various card products and increase customer engagement, including our membership rewards and AMEX offers programs, cashback reward features, interest rates offered on deposits, and participation in loyalty programs sponsored by our co-brand and other partners, providing digital and mobile services and an array of benefits and experiences across card products such as lounge access, dining experiences, and other travel and lifestyle benefits, creating world-class service experience by delivering exceptional customer care, developing a wide range of partner relationships, including with other corporations and institutions that sponsor certain of our cards under co-brand arrangements and provide benefits and services to our card members. Express wants to expand into the millennial and Gen Z customer space. They also talk about how they want to expand their position with small and mid-sized enterprises by providing more ways to help them manage and grow their businesses. They also talk about how they want to expand their business more into the international markets. And I think this is a really good thing because it shows that management is thinking about the future. And I really like that with high quality stocks where they're still looking for some form of growth because it does seem kind of like a paradox that companies try to grow forever, but I really do think that companies do always need to be looking for new ways to grow. And I think that the smaller businesses, if you can offer them something great with the money you're getting from the bigger businesses, then as they grow, they're going to be more loyal to you and want to stay in your infrastructure. And it also makes sense to want to take over some of these global markets because they could be a source of huge revenue in the future, especially with growing economies. And now finally, before I get into the discounted cash flow portion of the video, I wanted to talk about some of the risks that American Express faces. And they say strategic and business reputational and country risks, business and economic conditions are a major driver of our results of operations. Difficult conditions in the business and economic environment may materially adversely affect our business. So they say slow economic growth, economic contractions, or shifts in broader consumer and business trends significantly impact customer behavior, including spending on our cards, the ability and willingness of card members to borrow and pay amounts owed to us, and demand for fee-based products and services. Travel and entertainment expenditures, which comprised approximately 28% of our worldwide billed business during 2023, for example, are sensitive to business and personal discretionary spending levels and tend to decline during general economic downturns. Likewise, spending by small business and corporate clients, which comprise approximately 43% of our worldwide billed business during 2023, depends in part on the economic environment and a favorable climate for continued business investment and new business formation. So essentially, as long as the economy is good and people are spending money, American Express will do well. But if the economy becomes really bad and people can't afford American Express, then they will lose money. I mean, it's that simple. Their business relies on people spending money and more people joining the network. So if less people are joining the network and less people are spending money, then they will make less money. Have my weighted average cost of capital calculation for American Express. Here's my CAPM for my cost of equity. I have the beta of the stock, the current risk-free rate for the 10-year, an average market return of 7%, and we can see here we get a cost of equity of 7.508%. Here I have the interest expense. All of this is in thousands. The total debt, so we have a cost of debt of about 16.6%. Income tax expense, income before tax, effective tax rate is 21.81%, The cost of debt after tax is 12.981%, which seems really high. Uh, we have a total debt of 49,159, market cap 21,073, total 261,232. I guess this is just their total assets because it's assets are equity plus liability. And we have a weighted average cost of capital here of 8.54%. And I think mine is on the higher range. And that's okay because I'm fine with being a little bit more scrutinous in my models of the companies I'm evaluating before I decide to make a cash flow model. We have each of the free cash flows for the year here. This is the trailing 12-month free cash flow for 2024 so far. This is the average growth rate of 4.29%. I plug that in for a growth rate. We have a perpetual growth rate of 2.5% and a discount rate, obviously, that we calculated before of 8.538%. And this model is showing that American Express at the stock price of 301.05 has an upside of 9.94%. However, if we change a few of these figures out, it can obviously change the model values. If American Express is only able to grow the cash flow by an average of 2%, then the upside goes down to negative 6.47% and the stock is a sell. If it's 3%, then that means it is a moderate buy. And this is very interesting because our model is showing that the fair value is $302.18 and the stock price is 301.05. I do have to say though, when I look at a company like American Express, it seems like it'd be pretty difficult not to grow the cash flow consistently over time. You're going to have some periods of bad economic spending or different things that could happen that are weird little anomalies within the cash flows. But I think that a good range to be buying this stock at is anything below 300 if you can get in. That's my personal opinion, and I could be very wrong on that. But even though the stock has run a great deal lately, I still think that the stock is going to grow really well. I really like the quality of the stock and the valuation looks good too. And when the valuation is in line with the stock, I think this is a buy. And I am actually going to commit to buying 2 shares of American Express because this is so far one of the best stocks I've looked at other than Enbridge. But my problem with Enbridge compared to American Express is that American Express is a very unique business and it's a very, very, very strong business that can reliably grow and has a lot of competitive factors. And its infrastructure is baked into a lot of different businesses. So as those businesses grow, American Express does as well. And as American Express grows, it can offer better quality rewards to get new members in, which helps it grow even more. So I'm very bullish on this stock. I think it's going to grow very consistently. I would even put a 6% growth on this, and that would put the fair value at $373. I think that's reasonable over the next 9 years on average. But even if you just do the average growth rate over the last 4 years of 4.29%, you get a $330 valuation. I don't like the dividend yield, but I don't really care as much as long as they're using their money to grow the business more and grow the cash flows more. That is what is more, important to me. And I want to be a long-term holder in a business like this that manages money and makes a lot of money and is able to use network effects to their advantage. So, this isn't investing advice. I'm not a financial advisor, but I really like this stock and I personally am buying this stock and I'm really excited to hold this in my portfolio. And I think I'm going to keep adding to this position as it keeps going down and dollar cost average in. I would like to have a decently sizable position in this company and I really think it's going to do well going forward. And even at a 0% growth rate, it's still valued at 244. So I don't think the valuation is really that far off. And at a 5%, again, 347. If we do, 4.5 We get a 335. I think the stock looks really good. The valuation looks really good. I think that the future growth is going to beat. I think analysts, the stock has run a lot year to date, but I think there's still a lot more growth for this stock. And I think that you should try and get into this stock because it is about as quality of a stock as you can get. Thank you for watching the video. If you guys enjoyed the video, please hit the subscribe button. That helps the channel out a lot. Please hit the like button as well. I do pretty much daily stock analysis or stock videos about my personal portfolio. If you want to see the stock analysis playlist, click right here. And if you want to see the video that YouTube would most likely recommend to you, please click here. Thank you.